there are many monetary and non-monetary institutions that provide loaning and general services to the public. Hi, I'm Andre.
And I'm Ravi. This is ECON 101.
What is saving and loaning? So according to the Investopedia, savings refer to money that you put aside for the future instead of spending it immediately.
Correct. There are many benefits to saving, such as interest, a sum of money which is added to the total, which in turn gives profit to the saver.
Yeah, you're right. This is because they give it to loaners, right?
Right. Right again. A loan, on the other hand, is money, property, or other material goods given to another party in exchange for future repayment of the loan value amount, along with interest or other financial charges.
Alright, so now that we know what saving and loaning is, why are these services provided? Some more big institutions that provide loans and saving services to the general public are the central bank, commercial bank, thrift banks, and rural banks. Fact man, do your thing.
The central bank in any nation is the biggest and most prominent bank in a nation. Its main job is to manage the country's economy by implementing monetary policies, distributing currency. Its goals are to stabilize the nation's currency, keep unemployment low, and prevent inflation. Big as this bank may be, it still provides loaning and savings services. Interest rates ranging from 0.75% to 6.5%. Commercial banks are the second biggest banks. A commercial bank is a type of financial institution that accepts deposits, offers checking account services, makes businesses, personal and mortgage loans. These are the banks that the public mostly use for their banking as opposed to the others.
Thanks, Fact Man. On the other hand, rural banks are smaller types of banks that function the same way as commercial banks, but their main purpose is to help small-scale industries like farmers. Because of this purpose, their interest rates are kept relatively low to ensure that they can keep supporting these people.
According to the Investopedia, a thrift bank is a financial institution that has a primary focus on taking deposits and originating home mortgages.
Correct.
One major factor that differentiates thrift banks from commercial banks, such as Wells Fargo, Bank of America, or even BDO, is that thrifts generally have access to low-cost funding from federal home loan banks, which enables them to offer customers higher savings account fields. Thrifts also have greater liquidity for making home mortgage loans.
That's correct. However, these banks aren't your only options. There are many other institutions that provide the same services.
Other institutions are also the SSS and GSIS. The SSS is a sort of insurance policy for retirement. They take away part of your salary each payday, and once you need a loan, or if you're going into retirement, you can take away money from the SSS. The GSIS operates similarly, except that it only functions for government employees.
There's also savings and loan associations. These are small institutions that specialize in savings, home mortgage loans, and other types of loans. However, savings and loan associations place a stronger emphasis on residential mortgages, whereas normal banks tend to concentrate on working with large businesses and on unsecured credit services such as credit cards.
In short, many types of banks offer savings and loan services, and they all have unique traits and characteristics.
Thank you for this big, thick loan.
You're welcome.